Hi guys, it's Kel. This is the first time I'm coming live with you guys right now. I think I'll do it every Friday, that's all, okay? Because it's like camera shy. No lah. Just like once in a while I'll do this so you can put the face. Well, some people say that, Kel, we can hear your voice, but we don't see you in person. Okay, so this is me right now. All right, guys, today is the 31st of March, Friday, MAO with Kel. MAO stands for Market Analysis and Outlook, okay? All right, Michael Burry, right? Someone that I've been following very closely, seemingly has flipped position. Oh my God, this is something interesting. I never expect that. Okay. Now, basically, right, he is flipping, or he just said for the fun of it, or just saying because he's being sarcastic. Well, there's a lot of views on right now. But the main thing is, in my opinion, it's time to short the S&P 500 at 4050. Okay, I'll tell you more in detail very shortly. So once again, let's go. Now, disclaimer apply as usual, and thank you, Ames, for the coin sponsorship, right? Thank you so much. Now, first of all, let's recap what happened last night. The Dow Jones up by 141 points, NASDAQ up by 117, and S&P up by 23 points, hitting the 4050 mark. Now, that is a very critical support level and resistance level, previously as a support and now as a resistance. So if the market failed to go past 4050, there could be some selling. Now, Microsoft, Apple, Amazon, Meta, all went up. NVIDIA continue. This is incredible. But the thing is this, I'm focusing on the bank shares, and Wells Fargo caught my attention down by 1.55%. Now, put it on record if you have to do that, because I'm physically online right now. I believe that the banking sector problem is not out yet. The crescendo is not out of the way yet. In fact, it's about to start or resume again. Now, let me explain this to you in a very short time. But first of all, let's do a recap here. Well, apparently, the first thing first was that the weekly jobless claim reached 198,000, up by 7,000. So that was a good news, because why? More people get jobless. Okay, so apparently that seemed to be in line with the Federal Reserve doing what they are doing right now to cool down the labor market. And because of that, that actually added Wall Street optimism that Federal Reserve will basically stop the rate hike cycle. Now, I really don't think so. In fact, I'll come out in another video very shortly. I believe that Federal Reserve will not cut interest rate so fast. If they do it, there will be a big issue, and history pattern has shown it before, and it will likely happen again. So, of course, with this thing ongoing right now, the market perception thinks that, right, things is good, confidence is there, and that's why with the semiconductor going up, like NVIDIA, AMD, that basically bring more, confidence to the market. But again, let me remind you guys that today we have the PCE data, and although it's exclude the energy and food prices, we expect to grow by 0.4% in February and total 4.7% on an annualized basis. But I think that this number will come out at 4.8 in my personal opinion. And of course, there are several federal bank officials will be coming out to speak, all right, including this people who can vote like Lisa and Christopher Waller, okay? All right, so let's go with the first thing first. Oh my God, New York grand jury indicts former President Donald Trump in hush money payment case. Seriously, I cannot really see this point. It's pure political, right? Think about this. I mean, this case is over, and the judge back then basically make him win. But now apparently they're bringing it back again and says that this is in the connection of the hush money. Now, this is going to be the first former president to be charged with a crime. Oh my God. And Donald Trump is expected to turn himself in to the authorities next week. So that's why I feel that next week we'll have big issue, right? So the amount of money is $130,000, okay, really, to this lady called Stormy Daniels. But the thing is this is really incredible. It really doesn't make sense. And seriously, it's more of a shaming campaign, if you ask me itself, because we know Donald Trump is going for the 2024 Republican presidential nomination. So let's hear from the news on this and see what we have here. Let's go.
Being indicted.
Yeah, you know, as much as I recognize the country is as politicized as it is, and as much as I know the country's trying to sort of tear itself apart at times, I'm still a little bit surprised by this. Keep in mind the links between what Trump did on the Stormy Daniels payment and this crime are really very tenuous. Hush money payments are not against the law. This is a really sort of minor misdemeanor business accounting tax issue married to a possible campaign finance violation. That's it. As best I can tell, no human being has ever been convicted of this. And it's a novel criminal sort of approach being used against the president of the United States. It's a
All right, you heard it yourself, right? It's a novel approach. And yes, no one have been indicted for this. Oh my God, what is going on? This is really incredible. So all I can say is, guys, all this thing tells you that for this US, sometimes they really go all out, yeah, against Donald Trump. Okay, putting this away. All right, let's go to this. Now, is Jim Cramer correct this time? Now, remember, Jim Cramer says that this is a bull market. So he last updated yesterday, a recession may be coming, but Jim Cramer says he's not seeing the early signs yet. Well, honestly, you have to be blind not to see that, honestly. All right, take a look. He's saying that because everybody talking about it, but he don't see any sign. And unless you are in a tech company or you're working in the Park City or Bed Bath and beyond, then if not, you're doing great. Guys, come on, man. I mean, the thing is, there's so many people are working in Meta, working in Walmart, working in all these places, and you're telling me that I will have better time just because I don't work with those companies. I mean, that is ridiculous, correct? And the one he uses like Salesforce, said that because now the vacancy is very low. Oh, is that the way to do that? And apparently himself, he says that, right, he used timeshare company Marriott Vacation and say that the contract sales has went up. Of course, it's go up. It's after COVID. Of course, it will go up, right? I mean, this is really ridiculous. Sometimes I really wonder, why is this on TV? But still, it's a good indicator in my view. So nonetheless, it's all right. He was spot on back then. He reiterated that it was a bull market, and Michael Burry actually said that the time was different. So the thing is right now, Michael Burry is flipping. So is that because that now that means that Jim Cramer is correct? Well, I only want to do this. I brought him what happened when he gave his view in 2021. Look at all the share he recommended, okay? Oh my God, all these shares are down between 50% to as high as 60 to 70%. So what do you think? Can he be trustworthy? Let me know in the comment box, okay? All right, now, is Michael Burry flipping? Well, apparently, on 30th of March, he said that I was wrong to say sell. Wow, okay. So the thing is this, we all know that he said call for sell some time ago, but the sell was very ambiguous. Sell bonds, sell shares, sell indexes, sell whatever. He didn't really iterate that. He's a very this out guy, okay? So what happened is that now people are all saying that, no, the thing is that we're going to hit recession and we're going to do QT still. So what is happening? Right, so apparently just a few hours ago, he came in and said, going back to the 1920s, there's been no BTFD generation like you guys who've been buying and buying. Now, apparently he says that now bargain hunting is alive. 2023 is shaping up to be the second best year for deep buying strategy. Now, to be honest here, I mean, when I look at these two tweets, right, I just feel that he's just being sarcastic here, really. Now, of course, the media is speaking out and say that, oh, no, he's flipping now. He's going to be calling for a sell right now. You think I'm calling for a buy? Sorry, my bad. So what do you think? No, straight away when I see this, I just cannot link. And I feel that, right, this is something like this particular scene whereby he is so sure what will happen in the market, but then the market just keep on climbing, and then of course things get worse, and of course people get misunderstood him, and the investors get pissed off and stuff like that. Remember that. I hope that the video will not be cut away, but this is a video I prepared for you. Let's take a look. Yeah. All right, remember this scene from the movie The Big Short, right? So what happened, right? Remember, he was basically very sure that the Lehman Brothers thingy, the CDO crisis will really develop, and then the market will crash, and been shorting, buying out CDOs. But of course, the market kept on climbing. And at the time itself, people just get so angry with him. Clients call him, demanded money back, run back the money back. So at one stage itself, he lost it. Right, he really lose it. So just wondering, is it the same thing, or is it because he's under pressure, or because he's just being sarcastic? I don't know. I'll leave it there. Leave it in the comment box. Let me know what you think about that. But still, nonetheless, it's all right. We cannot deny this. Recently, you can really feel that every time the price goes down, the buying just instantly come in. Now, this buying is really irrational. There's no fundamental behind it. There's no earnings behind it. It's just that the price goes down, just buy, just buy, just buy, just buy. It's a little bit like what happened in 2015 to 2017, where you just buy the dip, buy the bid, and make money. But this time it's very interesting. The market is actually consolidating on the sideways track while allowing you to buy on the dip. So to me, it's like more like a boy who cry wolf scenario, whereby the market is trying to let you know that, okay, you can sell, but I'll buy from the bottom, but I'm not going to move the market to a certain level so they can exit too easily. You got my point? And if you keep on doing this, and one day you may think that it's very safe to buy, and that's where the trap is. What do you think, guys? So if you look back what Michael Burry did, now back then, right, when Michael Burry on the 31st of January says sell, right, the market actually went up. So a lot of people say that, hey, come on, you are wrong. They laugh at him. But do you notice that after that, right, the market actually collapsed down almost by 9% after the date that he called for sell from the highest point? Only recently itself, the market recovered, and now we are back here. So if you look at it in terms of timing, right, he's actually still correct, no? So the question is, a guy like him who made millions of dollars in the 08 crisis, do you think that he's so childish and immature, or he doesn't know his numbers? There's something is very wrong over here. I just feel that something is just not going right. So guys, all I can say is this. Remember, this Morgan Stanley, Mike Wilson, at one time on 6th of March was telling people that, hey, you know what? Maybe the share market will go up, right? Because it could be go short term. But the market flip it the other way around and tell the whole market that, you know, Mike Wilson's calling for buy right now. Let's buy in the market, blah, blah, blah. And what happened then? The stock market from that day onwards had to fall. So what do you think? Do you think that something similar will happen soon? So all I can say is this, all these things, you need to follow the price action. And if you follow through, you should be able to get your answer, because this is really a crazy world whereby media will play around with words and things can get very scary. Now, think about this, guys. Is the bank crisis over? Well, we can say very safely that now the risk element, the confidence, the sentiment has got better. Okay, the crescendo seemingly is over. But do you think so? I don't think so. I think there's going to be another one. Because why? The real reason why the market is holding up, because Federal Reserve basically pumping about $400 billion into the system. Although you can say that it's more like a bailout way, but the money still will leak out to the economy once, like it or not. So the thing is this, if Federal Reserve puts the money in, is to save the day, what if now they are taking the money out? So apparently now, this Federal Reserve just reduced their balance sheet by $28 billion. Now they just put in $400 billion in the last 3 weeks, and suddenly now they reduced by $28 billion. Let's take a look at this video and see what has happened. Yeah, let's go. Balance sheet, let's go.
Hi, Steve.
Thanks very much. The Fed's balance sheet actually declined this week after several weeks of increasing in response to the banking turmoil that's been out there. It was down by 28 billion, still around 8.6 trillion, pretty large, and the reversal of the quantitative tightening remains in place. Here's what happened. There was a reduction in lending at the discount window. It was down by $22 billion, and I'll give you the actual figure of lending that was there. It was still 88.1 billion, so it was still elevated, but down from before. What happened, though, is they went over to the new bank term funding program in greater amounts. That was up by 10.7 billion, and the bank term funding program was now up to 64.4 billion from 53 billion. So that's the new program where they lend to banks at par for the maturities that are discounted, and that's just about it. Morgan, all
right, so basically it's true that they reduced, but they put the money into the lending side. Yeah. So, well, what do you think? If let's say the market was brought up because of the balance sheet, then now if Federal Reserve is to reduce the balance sheet, what do you think will happen there? Think about this for a moment. All right, so why I called, I'm going to put my name into this right now and tell you this. I think 4050 is a good time to take a short position. Yes, indeed, a short position. Now, my view is pretty simple. It's purely technical. So this is area A, B, and C. So we are going to reach area C very soon. It's about the same for area A and B. And if you look back here itself, right, in these two previous scenario, you can see that the market basically will have a bit of this jagging effect, which I suspect is going to happen very soon. Then after that itself, right, then what will happen is that if you look at the major one, the market will basically come down. Can you see that? So in my view is that there is a very high chance the market will be coming down soon, okay? And the overall decline volume is something that I don't like it. And you can see that when you have prices going up and the volume decline, prices going up, volume decline, this is never a good sign. It's a never good sign when you have prices going up and volume declining. And that tells me that there's a very good chance the market may be coming off. So guys, what do you think? If you think so, let me know in the comment box. I will love to hear you guys and let me know what you think. So with that is all right, I'll have another video very soon. It's about the importance of not having a rate cut, because if the rate cut comes in, the stock market is going to plunge. All right, I'll see you guys in the next video. It's Cal signing off. Bye-bye.